Hello everyone, a very good evening to everyone. I hope you all are fine and doing well. Also, I am hoping that I am audible, my screen is visible, everything is okay from my side. So, today we are going to start our third unit, Correspondent Banking and NRI Accounts, where we will learn this concept in very deep and easy manner with lots of example that will help you to understand about this chapter. And if you have any problem in between, you can do comment. And if you are watching it in another time, so you can also ask your doubts. So let's start with the class. And if I give you the overview of the correspondent banking, that what is the meaning of correspondent banking? Correspondent banking means this is a system where one bank, that is correspondent bank, provides services like payment, currency exchange, trade finance to another bank. That another bank is called respondent bank, which is in the different country. That bank act as an intermediary to facilitate the international transaction without needing physical branches everywhere. Because we know that it is impossible to open the branches everywhere due to because it is expensive, right? And also, I think I'm audible. Just a second. Okay. So it is a little bit expensive to open the branches everywhere. And also, some countries are not allowing every bank to open the branch. So it is politically impossible, right? So, correspondent banking is that concept which basically facilitate international transaction without needing the physical branch everywhere. So it introduces risk like money laundering that require obviously strict AML KYC checks. It is very crucial for the global finance as well as it allows the bank offer the services in foreign market by using established networks, right? That is the concept of correspondent banking, overview of the correspondent banking. If we learn that first important thing, the important term, that is repatriable financial assets. What is the meaning of repatriable financial assets? Are those assets that can be taken out of a foreign country that can be brought back. In financial terms, you can use repatriated to the investor's home country, or if in foreign currency, it can be converted into the home country currency. In easy words, money or investment that you are allowed to send back to your home country are called repatriable financial assets. Those are allowed, you can send back to your home country, right? And what is the meaning of non repatriable? See, non-repatriable. Non-repatriable, you can say, which you can't send. And why this repatriation matters? Because many people who live, work, and they invest outside their home country, right? They invest in apart from the home country. So in that case, government regulate whether you can take money out or not, how much you can take, in what form you can take, and if asset is repatriable, it means country allows you to take it to the back home in a legal manner. Legal manner. Country is allows you, right? Okay. If we understand this thing with the help of examples, let's understand the example. Suppose NRI salary is there. Okay, right? NRI salary. There is Ravi who works in UAE. Ravi, who works in UAE and earns AED 10,000 per month, right? He sent part of his salary to the family which is in the India. Now, this salary is repatriable because it can be transferred to their Indian bank account, to his Indian bank account. It can be converted into the INR. This is repatriable case. Or we can take the example foreign investment. Let's take the example of foreign investment. In the case of foreign investment, suppose there is an Indian investor who buys the shares in the US company, right? An Indian investor buys the shares in a US company. Later, he sells those shares and got US dollar 50,000. If rule allow him, then he can send this US dollar 50,000 to India. It is repatriable. Or there he can convert it into the INR and use it in the India. And what are the repatriable asset? If an NRI invest in a special government scheme where money cannot be taken out of India, so that type of investment become non-repatriable. Now it is clear that what is repatriable and what are the non-repatriable, right? Now, so whatever the money can be sent back home, that is repatriable. Money must stay in that country, non-repatriable. Money is flexible, repatriable, restricted, non-repatriable. Money which are preferred by the NRIs, repatriable. Used for special scheme, non-repatriable. So why we need international banking? Because international banking help exporters or growing the economy. Financial transactions become smooth between the countries, whether it is belong to the remittance, trade payment, foreign investment, cultural exchange, anything, currency exchange. That's why international banking is important, right? So, what is the importance for the India? Like, what is here importance for the India? So, India has, we know that, a very large NRI population, right? Lots of people from India are NRIs. Millions of NRIs, millions of Indians, they are working in the Gulf nations, right? They are work in the Gulf nations like USA, UK, Canada, Australia, etc. So obviously they send the money to the India, right? They send money to the India for family expenses, for savings, for property purchase, for education, investment. These all are things called remittances. These all are called remittances. So why it is critical for the country? Because these NRI funds, these are the NRI's funds who are responsible to add the forex reserves, right? It also strengthens the Indian rupee, and you can say it helps in balancing import and export. Also, it supports the economic development. So, in very easy words, we can say that when NRI sends money to India, the whole country benefits, not just their families. Got it? So if NRI is there in Qatar who sends 50,000 rupees every month to his parents in Kerala, parents pay household expenses, money flows into the Indian economy, bank earn service charges, country earns foreign exchange. Same if there is an NRI in the Canada who opens their NRE account in India and deposits Canadian dollar 20,000. So bank use this money for lending, NRI earns interest, India gains foreign currency inflow. So that's why for India, these type of things are important. These types of transaction, these types of remittances are important. Clear? And if an NRI buys a flat in Bangalore and use money earning abroad, so obviously construction sector benefit, jobs are created, tax revenue is generated. So that international banking is that single concept that act as the financial bridge between Indian abroad and the India. Is that clear? Now, what is the meaning of correspondent banking? I told you it is an arrangement where one bank provides services on behalf of the another bank in different country or city. No bank can have branches in every country because obviously it is expensive and it is if we left the this leave the expensive thing, it is impossible because some countries are not allowing to open the branches and maintaining the account with thousands of bank is impractical. So bank use each other as agents. There are two meanings. Narrow meaning, two banks having account with each other. One bank has an account with the other. That is the narrow meaning. Apart from this, we can say broader meaning, even without maintaining account, banks work together. They handle the transaction. They provide services as the agents. So if we take the example of the foreign remittance, let's understand this correspondent banking concept. If there is a customer in the India, he wants to send the money to a person who is there in the Brazil, right? Now, his Indian bank does not have any branch in the Brazil. So, Indian bank uses the Brazilian bank as the correspondent, right? And Brazilian bank delivers the money to the recipient. Brazilian bank here charge a fee for the service. That is the concept of correspondent banking. So why this correspondent banking is needed? Because a bank cannot open branches everywhere. International trade and remittances must still happen. Customers expect seamless global services. So local banks, they act as representatives for the foreign banks, right? One more thing, one more thing we can say. If suppose there is an Indian exporter sells to the goods to the company, that company is in Germany, right? Now, German buyer pays through his local bank, and that bank uses the correspondent bank in the India, right? Money reaches the Indian exporter's bank account, and the banks will take the fees according to their charges. That is the concept of correspondent banking. I hope now that this thing is clear that what is the meaning of correspondent banking. So basically, uh, what are the benefits of the correspondent banking? First thing is that there is global reach without physical presence. There is faster international transactions, lower operational cost for the banks, and convenient for the customer. So we can say that correspondent banks allow a bank to operate the internationally through the local partner banks who are acting as the agents. Is that clear? That what is the concept of correspondent banking? So, repatriable assets, money you can legally bring back to your home country, international banking, banking system that connects the countries financially, correspondent banking, bank helping each other across the border. Okay. Now we have what are the benefits of this correspondent banking? Advantages. First thing, this is the best idea because banks do international business without opening branches abroad. Obviously, it saves money, high operating cost, it saves regulatory difficulties are not there. Then, second benefit is there is no need for global branch network. A medium-sized Indian bank cannot afford to open the branches in the USA, UK, Germany, UAE, and anywhere. So it partners with the banks in those countries. It uses them as a correspondent banks. It still offer international services to the customers. Clear? Then second benefit overcomes licensing restrictions is I told you that every country is not allowing to open the branches in their country. So many countries they don't allow, they have strict banking regulation. So correspondent banking bypasses this problem legally. Example, China and some Middle East countries tightly control foreign bank entry. So Indian bank cannot easily open the branches there. So they appoint local bank as correspondent and continues their business without violating local laws. Then low operational cost, obviously, this saves building cost, stationery cost, and lots of things. Rent, they have to hire staff if they are going to open a branch. So all these things are saved in this correspondent banking. Instead of spending crores to run a branch in London, an Indian bank pays small based fees to UK for handling the payment. I think this is best than opening the branch. And obviously access to the global business opportunities. Without physical presence, banks can handle export and import, process the remittance, supports the NRI banking, and offer trade finance. So correspondent banks give small and medium banks global reach at the minimal cost. So what are the functions, services provided by the correspondent banks? What are the functions, services are provided by the correspondent banks? Just a minute. Okay. So here, first services there is the account services, which require accounting relationship. Accounting relationship. First one we have clear housing functions. What does it mean? The correspondent bank handles outward payment, whatever the money going out, and inward payment, whatever the money coming in. All through the all these things are maintained with the account, right? Suppose if Indian bank debits in Nostro account with the US correspondent account, that means it maintains whatever the money comes in and whatever the money goes out. Then we have here collections. What is the meaning of collections? Correspondent bank collects export bill, import bill, checks on the behalf of the client bank. And after realization, it credits the amount to the client's bank account. Right? Then we have third payments. Payments we can do in the correspondent banking as a service because correspondent bank execute payment instructions of the client bank by just paying the beneficiary or by debiting the client bank account with it, right? Then we have here uh, overdraft and loan facilities also there. Here we can say that if the client bank account balance is temporarily low, the correspondent bank may allow overdraft, short-term credit, like overnight funding. It is also the services which is provided in the correspondent banking. And investment services also there. In the investment services, uh, if there is excess balance in the account beyond minimum required balance, the correspondent bank invests it in the overnight markets, earns the interest, pays the interest to the client bank, right? And then some other services we can include. In the other services, you can include uh, which basically may not require account relationship, because these types of things are provided according to the credit worthiness, according to the reputation of the client bank. Example, LC. Now, what is the meaning of LC? We didn't do the LC. LC, letter of credit. This is the next chapter, letter of credit. This is a type of agreement between the exporters bank and importers bank. So importer and exporter can do their business without any problem. Why? Banks intervene, so the competitions is there, and exporter and importer keep increasing. They don't care about the payment and the shipping of goods. That's why bank intervene and uh, issues LC, letter of credit, as a trust agreement between the exporters and the importers, right? So sometimes maybe it depends on the banks. They want to issue the LC, they want to confirm the LC or not. The correspondent bank also accept the draft on the behalf of the client bank. And correspondent bank also issues the guarantee, financial guarantees on the behalf of client bank. And also some foreign exchange services are also there, fundraising services are also there, and training and seminars, because correspondent bank provides training programs, updates on the global banking principles, practices, regulatory changes, and some new about the new products. Is it clear? So these are the services that are provided by the correspondent banking in the correspondent banking to the other bank. I hope the things are clear. If any problem is there, so please tell me, or if you getting the things, then you can also tell me that everything is okay. That will motivate me that I am going right. So, if I give you the small overview, what is the meaning of correspondent banking? Banks serve each other as agent across the countries. What are the benefit? Low cost, no branch needed, global reach, regulatory regulation easy. Account services are clearing, collection, payment, overdraft, investment. Other services, LC advising, LC confirmation, guarantees, forex, fundraising, training. Right? Clear? Now, three main accounts we have: Nostro, Vostro, Loro. First, Nostro. Our account with you. Our account with you. When a foreign currency account maintained by our bank in another bank abroad. When a foreign currency account New York, that refers that there is a rupee account of the American Express Bank with the PNB Mumbai. So it is Loro account, means their account with them. That is called Loro account. So Nostro, our account with you. Vostro, your account with us. Loro, their account with them. Clear? Then mirror account. It is a shadow of the Nostro account, where a bank maintains a Nostro account with a foreign bank. It also keeps a mirror account in its own books. It reflects all the entries of the Nostro account. It is used for reconciliation. It is maintained in foreign currency and the home currency. Clear? No sound. Just let me check. Just a minute. Now it is clear. I hope now it is clear. My mic battery is low. I changed the mic. Now I am hoping that I am audible. Okay. So, thank you. Now, that is the concept of mirror account. Nostro Vostro, I clear. No, mirror account, I told you, that is a shadow of no Nostro account. It is used to record all the entries and it is used for reconciliation. So, why it is needed? Just maintaining the Nostro account in the abroad, and entries maybe differ because obviously timings difference, bank charges, exchange rate delays are there. So bank need to maintain an internal record to just match the entries, identify the differences and correct errors. That is the mirror account, right? Okay, so you can take the exam, you can just learn with the help of example. There is a PNB Mumbai which is having an Nostro account in the city New York. Now PNB also keeps a mirror account in their own books which records every transaction whatever is going on in the Nostro account. So at the end this PNB compares city statement with the mirror account, finds the differences, reconcile them. So that's why mirror account is the shadow record of the Nostro account maintained for control and the reconciliation. Right? Okay. Then we can learn here that some electronic modes of transmission payment system in which basically in international and domestic banking money do not physically move. Instead, secure electronic messages in settlement are used to transfer the funds, settlement the trade payments, pays the salaries, suppliers, universities, etc. So here these systems are broadly of two types. Some are messaging system which sends the instructions. Some are the payment and settlement system which actually moves the money. In which first of all we have learned one of the most popular important SWIFT, which is Society for Worldwide Interbank Financial Telecommunication, and the headquarter of this SWIFT is there in the Belgium. Headquarter is there in the Belgium. It is not a bank, it does not hold money, it is a communication system
global secure messaging system. 11,000 plus banks are connected with this SWIFT, most trusted of by the banks, financial institutions and the corporates. They send the payment instructions, letter of credits, guarantees, trade messages, treasury messages. So it is the email system of banks, and it is highly secure and standardized. So why the SWIFT is needed? Because without SWIFT, without the SWIFT, bank obviously use telex, fax and phone, and which is slow or risky. So there is very high chance of fraud and errors, right? But with Swift you can say messages are standardized, secure, fast and also globally accepted. So it is, we can say, 11,000 plus banks are used in 200 plus countries, and it is available 24 hours, 7 days, 365 days. It is available every day. It is very highly cost effective for the banks. And here, earlier bank used bilateral key exchange, but now it is not used. So you can say that SWIFT is one of the most important communication system. Is that clear? Now we have here new, old system is this. Old system is the BKE, which is bilateral key exchange. In this, what happened? Generally, two banks exchange their secret keys. Messages are authenticated by just using these keys. Now the new system is the RMA, Relationship Management Application, where bank authorize each other in the SWIFT system. Only approved banks can exchange the messages. It improves control and the security. Right? Next, not that much important, but you can just read them. That CHIPS is from the New York, USA. Settlement is net, US based system used for large value US payment system, especially for foreign exchange and euro dollar settlement. Right? Then we have CHAP. Here, CHAPS is clearinghouse automated payment system, and Target is euro based payment system. The work is same. RTGS plus an EVA is euro based system, but from India we have RTGS. RTGS managed by RBI through the IDRBT. Through the IDRBT. What is this IDRBT? IDRBT, we have Institute for Development and Research in Banking and Technology. That is the IDRBT, Institute for Development and Research in Banking Technology. Right? It is basically for driving the technologies innovations in the India's and financial sector. So RTGS is where money is transferred in real time on gross basis between the banks in the India. Right? Most popular one. But here is the minimum transaction of 2 lakhs. Who manages RTGS? Technical support by IDBRT Hyderabad. How this RTGS work? Because all the banks are connected to the RBI central server. Each bank maintains a pool account with the RBI. When transfer happen? When sender pool account is debited and receiver bank pool account is credited. What is the limit? 2 lakh is the minimum limit and maximum limit is no limit. So minimum you have to do the transaction of 2 lakh with the RTGS. So basically, then we have NEFT. You can ignore this one. Batch based system. National Electronics Fund Transfer, which is used for small and medium value transfer. It works on batch settlement, 24 into 7 into 365 days it is available. Maximum no limit, minimum no limit. Every 30 minutes it works at on the batch basis. Total 48 batches per day. First batch starts on 00.30, last batch is 23:30, right? So that is the thing here, and it is adjusted through the RBI pool account, not real time but very frequent, very fast. It receiving bank must credit within 2 hours of settlement batch. So if a person sends 5,000 to a friend, he have to use NEFT and amount is credited in the next batch. So now this is a quick comparison, you can read it, and this is complete all the systems which you can read. It is basically for that, so it will help you to do the quick revision. Now the most important thing, NRI. Who are the NRI? If we listen this word NRI, in our mind the one thing is come that who lives outside the India are called NRIs. But NRI having two definition. One is according to the Income Tax Act, one is according to the FEMA Act. First we have Income Tax Act. A person who stays in India more than 182 days in the previous financial year is called resident. Less than 182 days is called non-resident, right? If a Raj stays in India for 150 days in financial year and rest abroad, he is NRI. As per the FEMA, if a person who is residing outside India and don't know when he will or she will come back to the India, and he is outside the India, person is outside the India for the education, for work, for anything, employment, and don't know when he will come back to the India, that person is considered NRI, which include employment abroad, business abroad, international organization. He is working in the international organization like UN, United Nations, World Bank, IMF, etc. So who are the PIOs? Person of Indian origin is a foreign citizen who is not belong to Bangladesh and Pakistan, who has Indian roots. He was once the citizen of India, is the child, grandchild, great grandchild of an Indian citizen, or he is the spouse of an Indian citizen, he having an Indian passport, his grandparents or parents were Indian citizen. So American citizen whose grandfather was Indian, it is called person of Indian origin. Who can or other person are treated as NRI? Indian government officials who are abroad, who are working abroad, students going abroad for higher studies, foreign spouse of Indian citizen, and tourist on short visit who are not NRIs, right? So why the NRI is there? Like, what is the NRI banking? Why we need this NRI banking? Okay, I told you this thing in starting that India has million of citizens who are working abroad, who are running their business abroad, who are studying abroad, who are permanently settled abroad, but they still needs the bank accounts in the India, right? They are interested in the investment facilities, right? They do the repatriation of the funds, right? They do property purchase as well as maintenance, right? And also family support is there. They provide family support. So RBI and Government of India has framed special rules under FEMA for the NRIs, right? Now you can just check that what are NRE account, NRO account, FCNRB. NRO must be in the rupee, NRE also in the rupee, but FCNRB account is in the foreign currency. Account type is saving account, current account, RD, recurring deposit, fixed deposit. But NRE is also in the same. FCNRB is only the fixed deposit or term deposit. Joint account in allowed in every case. Nomination is allowed. Person can nominate, NRI can nominate. Interest is taxable in the case of NRO, not taxable in NRI, and not taxable in FCNRB. Repatriation, yes, up to $1 million per year is repatriable. In NRE case, full amount is repatriable. In the FCNRB case, full amount is repatriable. Right. Now, source of funds, obviously foreign sources can be included. Indian income, only the foreign remittance in the case of NRE, and in the FCNRB only the foreign remittance. Right. Then we have here exchange rate is exchange risk is nil in the NRO. NRE, it depends on the customer. In the case of FCNRB, it depends on the bank. In the interest rate as per the banks in the case of NRO, as per the banks in the case of NRE, and it is linked to the LIBOR. Minimum fixed FD is for 7 days, for 1 year, and maximum is for 10 year and 5 years. Now one term, here is the one term which is OCB, overseas corporate bodies. What is it? Overseas firms, trust companies owned at least 60% by the NRIs. 60% at least by the NRIs. OCBs are not allowed to make investment in the India. This is important thing. OCBs are not allowed to make investment in the India. Right? Okay. So what is NRE account? A rupee account where we can park foreign earnings in India with full repatriation. Currency is rupee. Interest is tax free. Exchange rate, it depends on the customer, and types are saving account, current account, recurring deposit, fixed deposit, repatriation, fully available. Remittances from abroad is allowed. Transfer to the NRE account allowed. Foreign currency notes, traveler check during visit to India are allowed. So NRE to NRE account allowed, NRE to NRO allowed, NRE to NRE not allowed, NRO to NRE account not allowed. So if a NRI in the UK gifts British pound 5,000 to the India, it can be credited to the NRE account. It can be converted to the INR account. Interest earned is tax free, and it can be sent back abroad anytime. Same, what is the meaning of FCNRB account? A fixed deposit account maintained in the foreign currency. A fixed deposit account maintained in the foreign currency. Right? So what are the features? You can see here, I already told you what is the meaning of power of attorney, where the joint accounts are allowed of the NRE and NRI. Two NRIs can open an account. NRI and PIO can open the account. NRI plus resident relatives, they can also open the account. Former and survivor basis. First, what is the meaning of this? Former or survivor basis. If any account is open, all the things are in the hand of former. But when this former dies, all the responsibility automatically shifts on the survivor, like that means second holder. Right? And power of attorney holder, they can't withdraw the cash locally. They can remit the funds only to an NRI account holder. They cannot gift or transfer funds to the third parties. Clear? That is the uh, POA holder restrictions, or the resident relatives restrictions, or the facilities which are available to them. Is that clear? Okay. Now, apart from this, we have NRO account. Let me give you the overview of the NRO account. What is the full form of NRO account? Non-resident ordinary rupee account. It is basically an normal Indian rupee account. Indian rupee account for the NRIs who can manage the income earned in the India. Right? So, currency is rupee here. And what is the type? Saving account, current account, recurring deposit, fixed deposit. Right? Income is taxable around 30% plus surcharge. Right? Also, repatriation is limited here, only up to $1 million per year. And transfer is allowed to NRO to NRO, NRO to NRE is still not allowed. Who can open? NRI can open, foreign tourist can open. And when a resident become NRI, his existing resident account redesignated to the NRO account. Clear? Okay. Then we have here, okay, we have here one more SNRR account. What is SNRR account? SNRR account is special non-resident rupee account, meaning this is a rupee account for the foreigners, right? NRIs who are having interest, business interest in the India, right? Who are having the business interest in the India. It is used for not violating FEMA rules. Currency is rupee. Tenure at least maximum 7 years. Taxable. And basically, if NRI become resident, so it will be converted to the resident account. And Pakistanis and Bangladeshis, they need RBI approval to open the SNRR. So that is the thing. That is the thing about the different types of account. So we can see, we can say here in quick way that NRO interest is taxable, NRE interest is tax free, FCNRB account has no exchange risk for customer, SNRR tenure is maximum 7 years, and minimum NRI ownership in the OCB is 60%. So this is about the correspondent banking. I hope the thing is clear. If any problem is there, you can do the comment. Tomorrow we will do chapter 4, documentary letter of credit. And if you like this video, kindly do the like and subscribe to the channel. So let's meet in our next class. Till then, take care and have a good day all. Thank you.